Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining space. Joining me this week is John Feneck, founder and CEO of the Feneck Commodities Report. John, welcome back to Kitco.
Thanks so much, Paul.
Please note, Digging Deep is not investment advice, and the opinions expressed here today are our own and not Kitco's. John, let's start off with Happy July 4th for tomorrow.
Yeah, I'm looking forward to it.
I bet. It's been a relatively quiet week so far in the mining space. Canada Day on Monday, July 4th tomorrow. So let's start with some red, white and blue. The first presidential debate for the US presidential elections in November happened last week. Former President Donald Trump, by and large, came out the best of that. Incumbent President Joe Biden was so bad, according to many people, that they called from him to withdraw from the election. Then the US Supreme Court said Donald Trump and other former presidents are partially immune from criminal prosecution. So a good week for Mr. Trump. John, is Trump an unstoppable force to be the next president of the United States?
It seems that way at this point. I feel that with that date now being moved from July 11th to September 18th, it's really upping the ante on September, right? Because September 18th is that big Fed meeting that I'm sure we'll talk about interest rates and such, but it is like a double whammy that day now where you've got some major stuff going down on the same day. Obviously, the Republicans are in the driver's seat at this point. I have to say, as an American, it was tough to watch that debate last week for multiple reasons, but it was it's eye-opening, right? It's really just another reason why gold and silver make a lot of sense in portfolios. That these are the two best individuals we can put forward in the country, I think.
Well, and gold and silver having a very good day today. Silver's up more than $1. Gold's up more than $30. And this is coming off a few days of being relatively mild action in the precious metal space.
Yeah, absolutely. I mean, very positive to see gold hang in there at this 2,300-ish kind of level and really not give it up. Silver now closing above 30 on the weekly, very bullish. Has not dropped back to that key 26 level that a lot of people thought it would test, which it hasn't come close really. So that's really good. I think what's going to be really good, Paul, is earnings, right? For the producers of gold, when you can clip, some serious margin here, I think people are going to be surprised, meaning portfolio managers and such, that Agnico, Barrack, and Newmont, the big three in GDX, are all going to put up some really good quarters here in July and again in October. I think that investors should get on the bandwagon now as opposed to later.
I had the privilege of interviewing Amar Al-Jouni, the CEO of Agnico Eagle Mines, last week, and I asked him about that. I asked him when investors can expect to see the bonanza of the gold price appearing on company balance sheets, and he very much said, look at quarter two. There's going to be some very good results, good margins. Said inflationary aspects have been pretty much under control, so he's expecting to see good things, and I think he said that will help starting to entice investors back to the space. They're going to start seeing that margin growth. And I imagine that's long overdue.
Absolutely. And if you look at the rally that happened, the most major rally in probably our investing lifetime for gold stocks was coming out of the '08 crisis, right, into '09. If you look at GDXJ, for example, from Jan 1 of '09 to call it July 1 of '09, it was up about 170, 180%. And then it continued to move into 2010 and 11. The rally continued as large companies like the ones we just talked about really started to put up some really good, earnings. And that rally lasted until we know gold peaked out.
Okay, let's stick with the presidential election for the moment. During Donald Trump's first term as president, he quickly reversed various pieces of legislation put in place by his predecessor, Barack Obama, particularly regarding natural resource development. Now, the Biden administration has made several rulings on natural resources that are potentially up for reversal. And here I'm thinking of the Ambler Road in Alaska was recently blocked by the BLM. That's Trilogy Metals project there. Northern Dynasty still wants its date with the regulator for its the permitting process of Pebble. Again, the EPA has been blocking that. John, if Trump were elected president again, do you think he would do the same thing and reverse some of the natural resource development decisions that the Biden administration has taken?
I do. I think that investors should be overweighting the U.S. right now, given what we just saw in the debate last week. I don't think that Biden is as bad for the mining sector as many people do, but clearly Trump is going to be more supportive. And I think that Trump's been out of office now for long enough to kind of take a step back and see that we need more job growth in the U.S. He talked about this in the debate over and over again about job growth, right? So how do you create job growth in the U.S.? Well, start getting some things moving, right? Alaska's been a nightmare, as you've said, with NAK, TMQ, the stocks you just mentioned. It's very frustrating for investors. I think there's a lot of opportunity in the U.S. In places like Wyoming. We talked about that last time, Paul, right? The U.S. gold getting permitted there. That's a major breakthrough. And you have the obvious in Nevada and Idaho and very supportive states, but what about like South Dakota, right? It's run by Kristi Noem. Noem is one of his possible VP choices. How is that going to be bad if you're a miner in South Dakota, right? Like I think there's a lot of opportunity that investors are missing right now, kind of gaming what the future might look like under a Trump presidency.
Now, one other aspect of Donald Trump, he's got a deep distrust of China. Now, again, if he were elected president, do you think that could spur more Department of Defense grants to mining companies in the US so the US can better compete in the commodities war?
Yep, absolutely. I think we also talked about that on June 3rd and China's dominance in some of these, commodities that are on the U.S. critical minerals list. We named a few last time: tungsten, which is used in body armor and ammunition, and is used by NVIDIA, believe it or not, in their semiconductors, right? I mean, there's only one junior you can buy in the U.S. that will give you tungsten exposure. They're not producing it yet, but I think they could be getting some type of DoD money at some point in the next 12 months or so, and that's Golden Metal Resources, which just got renamed to Guardian here. The ticker is GMTLF. I spent some time with Oliver, the CEO, in DC when you and I were there, Paul, just 2 months ago, and they've got a lot of exciting things going on in terms of news flow there in Nevada. Great jurisdiction. I don't know why the U.S. wouldn't support something like that.
Okay, well, let's move across Washington to the US Federal Reserve. John, a lot of the talk about the US Federal Reserve this year has been on how many times they will look to pare back interest rates, and that's evolved into when or if will they move to pare back interest rates. What do you think is the current thinking of when interest rates will start to come down?
The interesting thing for me on June 12th, Paul, when we last had the Fed meeting, was that Bloomberg, CNBC, and all the rest, as within a minute of the announcement, all said the Fed expects one rate cut this year, and so that's new news on the screen. It's not news for PMs in the U.S. or really anywhere, because we've been factoring in just one cut in 2024 for, I'd say, a couple months now, right? But what does one cut do? I mean, it's not material. And so if you look at the CME Fed Watch tool right now, it's showing a 64% probability of the Fed cutting September 18th. And it gives about a 44% probability to another cut in December. But even if we get both of those, it's only 50 basis points. It's not really that meaningful. So I'd say there's a lot riding on, the Fed here taking more action in the fall and then also into 2025. And personally, going back to the presidential thing, I mean, Trump has said, openly, he's not a fan of Powell and he's going to get rid of him if he gets into office. So then you have that to contend with in 2025.
That sounds like it's going to be quite some fun and games coming up. Let's move across to red gold, to copper. Like the gold price, the copper price has been holding up quite well despite some headwinds or at least crosswinds. Copper's approaching $4.50 per pound again. John, speaking to a lot of other people, there does seem to be very much a sense that given that gold and copper have been holding their ground in the recent weeks, that there's a feeling that prices are basically, the spring is coiling for a price leap higher coming up. What's your view?
Absolutely. BMO put out a piece this week about why they were bullish copper. If you look at Morgan Stanley in April, they put out something similar as the largest broker-dealer in the U.S. Goldman Sachs last year was very vocal about a much higher, copper price by December of 2025, meaning, 15,000 a metric ton or more. We're nowhere close to those prices right now. So there's still a lot of upside in the copper price, which is why we're buying stocks that are in the copper space, right? Because you're going to get tremendous leverage to that price move. We mentioned U.S. gold on your show the last time, USAU. I think you brought that one up. They're gold and copper in Wyoming. We've started to buy some juniors like Faraday Copper, CPPKF. We bought Surge Copper here recently. We're just trying to load up on names that have potential that are trading at, kind of ridiculous valuations on a 3 or 5 year basis.
Well, one place that certainly gets the copper picture is Peru, and they're very bullish. Just this past week, Peru, the Tia Maria construction has restarted. That's a $1.4 billion development project for a mine from Southern Copper, scheduled to produce 120,000 tons per year of copper for 20 years. A wave of social protests in the past have seen the project blocked for much of the past 10 years. There's been extensive social engagement by Southern Copper, including building a reservoir. Peru Mining and Energy Minister Romulo Mucho is certainly motoring in terms of reinvigorating the copper sector in Peru. John, why aren't more countries doing similar things to try and get projects under development and into production?
It's a great question. I don't know what the answer is. I don't know what these countries are waiting for because they're just hurting their own economies by not, being supportive. Peru has turned the corner. Castillo has been out of the way now for 18 to 19 months. We are overweight Peru as a country in a few names. That would be SilverX, AGXPF. They're a producer of silver in Peru. Aftermath Silver, AAGFF, which is a developer in Peru and Chile. And then also Element 79, ELMGF, is a new position for us because they're a near-term production story, going back into production in Peru within about 18 months or so. So we are looking at buying that country now because, the element that was the problem there, which is Castillo, is out of the way. I don't know why it's taking this long for people to get behind Peru, but it's a value manager's dream right now because, as you know and just pointed out, Peru is a very commodity rich country.
Absolutely. Now, in terms of hurting your own economy, let's bring in Panama. Panama has a new president who took office this week, Jose Raul Molino, and what a bunch of economic headwinds he has to face due to the closure of the Cobre Panama mine in December last year. The country faces almost $60 billion of arbitration claims. It faces closure costs of Cobre Panama of about $1 billion or more. It has a 130,000 ton stockpile of copper concentrate deteriorating into an environmental hazard. It has $1 to $2 billion of sovereign debt maturing each year, and it has a dollarized economy, so it cannot print money to get out of some of these things. John, who would want to be president?
Not me. Yeah, that sounds pretty rough for any person to contend with. And more power to him.
Okay, well, I want to squeeze into this copper segment, even though it's a zinc mine. Ivanhoe Mines announced the completion of construction and the restart of the Capiche zinc copper lead germanium mine in Democratic Republic of Congo. The first concentrate was poured there on June the 14th. It will produce 278,000 tons per year of zinc, making it the fourth largest zinc mine globally. Great news there for Ivanhoe, for Democratic Republic of Congo, and for the zinc market.
Yeah, absolutely. I mean, Robert Friedland's been just a leader in the commodity space for so many years. I know when I worked at Sprott, everyone there from Rick Rule all the way down just loved, what Robert was doing at much lower prices. And that's been a tremendous, stock versus the peer group.
Okay, let's move on to uranium and a bit of M&A. This is a week or so old, this news, but we didn't cover it last week. Paladin Energy is to buy fission uranium for 1.14 billion Canadian dollars, an all-stock deal at a 30% premium. This will give Paladin a diversified presence across uranium mining jurisdictions, adding Canada to Namibia and Australia. John, uranium has been strengthening for a good while now. So I guess one of the questions is, why haven't we seen more deals in the uranium space?
Yeah, I think what we saw last year, Paul, was a huge move in spot, which was not followed by a huge move in a lot of the smaller equities, at least. I mean, Cameco, CCJ had a beautiful run. There were names that participated last year, but the smaller stuff really didn't participate that much. It started to in January when spot broke $100, and then it just faded. I mean, we've seen another fade in this subsector of the commodity world, but I think CEOs saw the light at the end of the tunnel and are not willing to sell cheaply. I think that's kind of what's going on. Is one of the things we look for is CEOs kind of locking up enough of their stock so they don't, have what you and I have discussed before, Paul, which is a take under. Where they have to give up their project because they didn't have a good cap structure. So I think more and more of the junior space is just kind of sitting on what they have right now, riding this situation out and just waiting for a better day, which is a smart move, I think.
Okay, and a lot of the commentators I speak with think the better days could start coming as we get into the September quarter. There seems to be a lot of energy that it's coming.
Mm-hmm. Yeah, I agree. I think this is the time you want to start buying some of the juniors out there, that especially ones that are drilling, like Forum Energy. I mean, they have a program that's 10 times the size of their program last summer. So they are completely cashed up for that program. And, at 8 cents, it's like, come on. I mean, this thing hit 16 cents last year on just a couple of little hits. I mean, if they actually put together a real program, I think you revisit that price point and, make a lot of money. I mean, that's what the name of the game is, right, Paul? It's like, whatever percentage gain you can get out of these names, it's something I coach my clients on all the time. It's opportunity cost. Yes, you might make some money over here, but if you're not using that capital wisely, you're not going to make as much as we would, because we're rotating money all the time into names where, we think we can get the best alpha.
Okay, well, let's end on drilling. It's been a bit of a slim week for drill results because of the public holidays in Canada and the US. So, John, what's a drill result that stood out for you this week?
Yeah, it was a few days ago. Stillwater Critical, which is PGEZF in the States. Again, I've been in this part of the world, Paul, for over a decade. I started with Stillwater back in the old days, SWC. And that got taken over by Sibanye, SBSW. And then I got interested in this stock about 2 years ago. The CEO, Mike Rowley, and I have talked numerous times, and they've just been very methodical with what their plan is. I mean, if you look at their drill results a few days ago, they've drilled 236 holes to date. I mean, it's not like they really need to do too much more drilling. But when they do drill, it's they continue to put up great results. And now you have Glencore owning over 15% of the shares. Glencore just put an exec on their board. I mean, clearly someone in Glencore is very interested in partnering more with Stillwater. And I think that's going to get the attention of Sibanye and potentially someone else, because Sibanye is literally connected to them in Montana. So I think Neil at Sabine would be more interested in putting a bid out there if Glencore were to make the first move.
I need to ask Mike about that. Usually, when I speak to Mike, we end up talking about guitars. That's well, that's great stuff. Thank you very much for joining us once again, John.
My pleasure, Paul. Thank you.
And I'm Paul Harris, and this is Kitco Mining.